Hello everyone, welcome to the Bank of England preview with me, Craig Erlam, Senior Market Analyst at OANDA. Now, first we'll take a look at the event itself and highlight any key points that we need to be aware of. What you can see right in front of you now is the OANDA MarketPulse economic calendar. It can be found on the OANDA MarketPulse website. Just click on the economic calendar tab at the top. On the home search and all the other tabs, you'll also find plenty of other articles which have been written by the OANDA MarketPulse analysts all around the globe. Today or tomorrow, at the time of recording, we've got the Bank of England monetary policy meeting, so that'll be Thursday the 15th of September. We do have retail sales, I should note, just before the meeting, which could result in some volatility in the pound ahead of the decision itself, which comes at 11 o'clock GMT, so that's 12 o'clock British summertime currently in the UK. And I think this is going to be a very big announcement, like most central bank meetings at the moment, because of the possibility for new stimulus measures to be announced. Now, I don't have to tell you what happened in the last couple of months in the UK with the vote to leave the EU and the volatility and the excitement that brought around UK financial instruments. The pound has been very responsive, down more than 10% against the US dollar. We've seen big moves in the FTSE and in UK gilts. And today's announcement really does bring that back into focus. We saw a new raft of stimulus measures announced last month from the Bank of England that included a 25 basis point rate cut, bringing the interest rate down to 0.25%. We saw a 60 billion increase in quantitative easing. That's the purchasing of UK government bonds, bringing that to a total of 435 billion. We saw a new corporate bond buying program announced of 10 billion pounds, and finally there was a new program, a term fund lending scheme announced by the Bank of England of up to 100 billion pounds, which is aimed at encouraging banks to lend to households and smaller businesses through lower interest rates, depending on how much they lend. So this was a massive stimulus package that was announced by the Bank of England next month, and because of that, and because we've seen an improvement in the economic data, I think the market consensus is that we're not going to see any change in monetary policy on this occasion. Now, while that is the case, and therefore you may expect that we'd see no response, the fact that the Bank of England now releases the minutes from the meeting, which is accompanied by the votes for quantitative easing and the votes for interest rates alongside the decision itself, that makes this a big event again for UK denominated assets, like say including the pound, the gilts, and also the FTSE. Because what people want to know right now is, has the recent improvement in the economic data in the UK been enough to warrant the Bank of England holding off on the next interest rate cut until maybe next year? Now, you'll remember that at the last meeting, the Bank of England said, if the UK economy performs in line with our expectations, we will probably cut interest rates again before the end of the year. What we want to know this time is, did the economy perform in line with expectations, or has it actually performed better than expectations? And therefore, what does that mean for monetary policy before the end of the year? Usually, if we're more likely to see an interest rate cut, that would be weak for the pound and could be a boost for the FTSE, and would be a boost for gilt prices, which would result in lower yields. Or and that would be known as dovish by the Bank of England, or a hawkish response, which would involve the Bank of England suggesting that we're not going to see any further stimulus measures this year, would typically be bullish for the pound, so see the pound move higher, which would be negative for the FTSE or bearish for the FTSE, and would therefore be potentially bearish or negative for gilt prices and see yields rising. So these are the type of moves that we're looking for in today's vote. So the voting patterns will be important, but also the commentary that we get from the minutes themselves will also be very important. Now let's take a look at a few charts to see what impact that could have for the pound. Now this is the advanced charting package, which you may or may not be aware of, that now is available on the OANDA FX trade platform. Let's start with the pound versus the dollar, and you can see that the pound has been very much range bound against the dollar for quite a while now, ever since the Brexit vote really. We have these lows around 128 to 128.50. These are the deepest lows from post the Brexit vote. You've also see the support zone around 130.50 to 131. That's the biggest support zone that I think we have in play at this minute. If we do get a sign from the Bank of England, for example, that we're going to see further stimulus this year, despite the fact that we have seen an improvement in the economic data, then it's this 130.50 to 131 that I think could come under some considerable pressure. We're currently trading at around 132 at this moment in time. So 131, then 130.50 could come under pressure if we do get some suggestion that we're going to see further stimulus. On the other hand, if we do see from the Bank of England that they've acknowledged the better economic data and perhaps suggest that we're going to see no further stimulus this year, which would be known as hawkish and therefore be positive for the pound, then we could see the pound trading up towards these 133.50 to 133.70 levels. Again, you can see these periods that this level has been a strong zone of resistance. If we were to move beyond that, then we'd perhaps be looking back up towards the 135 highs in the coming trading sessions, which again you can see immediately following the Brexit vote, and then again in July, and we almost approached this level as well earlier on this month. You can see that this is a key zone of resistance for the pound against the dollar. Now, if we look at the euro versus the pound, again, it's all about zones of support and resistance here. We can see that first zone of support to the downside, the most recent one actually, is 84.20. You can see that when we came off the lows back on the 13th, so this was yesterday, when we came off the lows, we found support around these 84.20 levels before rotating back to the upside. So if we do see any selling if we do see any buying of the pound, of course this is the euro versus the pound, so any pound positive moves, which would be the hawkish moves, the hint at no further stimulus, then this would result in the euro trading lower against the pound. So anything positive for the pound could see this 84.20 being tested once again, as it was yesterday, and a break at that level would then bring 83.50 and 83 into focus. Any moves below there, which would be quite considerable on the back of this event alone, would potentially bring 82.50 into level, which again was a key level of support post the Brexit vote. Anything negative for the pound, then that could see the euro trading higher against the pound, and this would bring 86.25 to 86.30 into focus, having been a key level of resistance back here. It could also see the 85.90 to 86, so 85.90 to 86.30 could become a key area of resistance, with it being a prior level of support and resistance. In any moves above there, we could be looking at the post-Brexit highs around 87.25, but it would take something very significantly negative for the pound to see us trading at these levels. Finally, I've brought up a sterling versus the yen, and again we remain range bound in here, but what I find interesting about this is while we do have support to the downside around 129.15 and 128.75, in the near term we have support around 134.50 and resistance at around 137.15. We've also got this moving average, which is the 55-day simple moving average. Now, we broke above here. You can see on a number of occasions previously, this has provided some form of support or resistance along the way, and this time we have broken through here once again. Now, the fact that we've broken through here and found support here makes this a key zone of support, as well as the 134.50. We've got the 135s, which is now a key zone of support, and any bullish news for the pound, so this would be hawkish news, this would be a suggestion that we're getting less monetary stimulus, or we're not going to get any further monetary stimulus before the end of the year. That could see this pair move higher. That would bring 137.15 into play, followed by 139 and 140, these prior levels of resistance. And again, pushing on, if the Bank of England becomes less willing to do further stimulus in the coming months, then we could be looking at 142.30s to 143.25s, and again that's where we bring the 89 period simple moving average also into play.